Welcome back, traders. This is Sandra with Trading Made Simple.
One of our lead coaches, Paulo, he's from Spain. He's an expert chart analysis, a trader, and he uses dark pool levels. Now, what I'd like to do is just quickly introduce the tool that we give you with autopilot, right? So we gave you a system to help you identify point of control and support and resistance. But really, there's so many different ways that you could utilize support and resistance. We've given you one easy visual indicator to do that. Why did we do that? Well, to put together, as an example, if you were to go into the studies area right here of thinkorswim, you could actually find 2,000 indicators, right? So because trading is actually subjective, it's subjective in nature, meaning that what I analyze and what I view on the chart could be completely different the way that your analysis is on the chart. And because it's that different across different education levels, across different platforms that you're actually trading on. So what we were discussing was support and resistance and how we use one indicator, even though there are thousands of indicators out there. We're showing you how easy your platform can support your analysis when you're doing your trades. And what I love about Paulo is that he uses dark pool levels. And so dark pool is really basically a definition of that, is that large institutional companies, they trade stock and options between themselves. They are, in effect, their own market making system. And because they have billions and billions of dollars in options and stocks, they are able to move, believe it or not, this is very interesting if you don't know this, they're able to move those shares and stock between other conglomerate companies without it actually affecting the stock market like in traditional senses. Paulo, you're here today. Welcome. I want to talk to you more about dark pools, and maybe you can share your screen and start describing how you analyze dark pools in your trading every day. Before we dive into the next trade setup, if you're new here, welcome. I'm Sandra. I teach everyday traders how to use automation to trade smarter. If that sounds like your style, make sure to subscribe and check out the resources in the description to get started.
All right. Hello, everyone. How is it going? Can you hear me successfully?
Yes, we hear you and we see
Yes.
you just great.
Good morning, Sandra. Good morning, everyone. First of all, nice to meet you. I'm Coach Paulo. Thanks for Sandra for inviting me here in this space on Wednesdays to share some important insights, some important information on how to use the multiple tools and features we have available in our platform to improve and enhance our trading or investing method, right? So today we're going to be discussing the dark pool levels. And let me share my screen here 1 second.
Please share your screen. And this is great because you're going to also share some of the tools that we actually have in our community. Now, Paulo actually teaches as well as trades live every morning in our community. And so this is great for him to actually share some of the data that we use as well as what dark pools really mean and how independent trader, a retail trader, right, can use what those huge conglomerates are doing to help point us in the right direction on our charts.
So first, what would be the dark pool levels? To understand the dark pool levels, first we have to discuss the dark pool platforms. So what are the dark pool platforms? The dark pool platforms are like hidden brokerage, we could view them like that, in which only institutional money is actually able to open or to close positions to trade there. So by institutional money, of course, I mean big institutions, hedge fund managers, pension fund managers, CEO of the most important companies, also board directors from the top S&P 500, New York Stock Exchange. These market agents can access the dark pool platforms for the market security. All right, so how is it that this works? All right, when we want to buy or we want to sell a position, we go into our broker, right? It can be thinkorswim, it can be interactive brokers. We just do 1, 2, 3 clicks and we can open or close any position that we are looking for, because of course we're trading retail volumes. And those are positions that are not going to, we're not going to be able to move the market by itself. Hopefully we could, but not yet, right? So the activity we do that happens in the broker, it's public, all right? So the broker can have access to that data. Now, what happens, for an example, that this is an example to understand how dark pool platforms work, and then we're going with the dark pool levels. So let's say, for example, that Jeff Bezos, he wants to sell 20 billion Amazon stock, all right? Or less. Let's say he wants to maybe sell 5 billion Amazon stock. So if Jeff Bezos, of course, he doesn't have his positions on thinkorswim or interactive brokers, right? He would be likely glitching thinkorswim if Jeff Bezos just goes and hits sell 5 billion Amazon. So these type of big important market agents, they can access the dark pool platform. So what are the dark pool platforms? Are these platforms that let these market agents do these transactions and remain anonymous? And yes, they can remain anonymous. If that should be legal or not, of course, it's a whole nother conversation. But what is the concept that by why this happened? So if Jeff Bezos would go and he would sell 5 billion Amazon stock in thinkorswim, yes, he does have to do their quarterly disclosures, but by the time they do the disclosure, it might have already been 4, 6, or 8 weeks since Jeff Bezos bought or sold a position. So of course, when the news comes out, that does trigger a little volatility, but the market kind of has already priced in that move, right? So there's not much of a big impact if maybe some news come out, for example, like when Warren Buffett, when he sold half his Apple stock, those news came in 3 months later when he did the disclose. So the volatility didn't impact Apple stock that much. But imagine if when Warren Buffett was selling his half Apple stock, he did it on a regular broker. People would have gone crazy. Imagine being an Apple investor and news come out, Warren Buffett sold yesterday half position. You're absolutely going to go and run and sell yours, because if a value investor like Warren Buffett is selling his position, must mean something he knew. So it is going to bring a lot of volatility.
I'm just going to interject really quick. I'm so sorry to interrupt you, but
sorry, my headphone was not working.
Oh, no, that's okay. But I wanted to, just kind of to jump in here. So I just want, for those new traders out there that don't know this information, how shocking it is, right? That here are these huge conglomerates, these huge position makers that actually are buying and selling billions and billions of dollars, and yet it's undetected by the market. And the reason it's undetected is because our stock market right now, has everyone's retirement. So all the government employees, every employee that you can think of across the nation, really, right, is invested in our stock market. And so what a dark pool level 20 years ago was almost unheard of. And now I recently read a report, and I don't know if you did as well, Paulo, but over 50% of activity that's actually happening in our market is all undetected. Can you believe that, guys? That is mind-blowing.
It's crazy, and that is true. I also saw that graphic actually 20 years ago, back in 2005. Exchange activity represented 82% of the total market volume,
right?
And dark pool data was below 20%. It was only 18%, something like that. And this year, the first time in history that dark pool data actually surpassed on-chain activity. So now actually the real moves on the market are happening in the dark pool, and that is a reason it's very important to follow it. And that is also the reason why the market has adapted and has launched a series of features and tools that retail investors can use to read that dark pool. And we have 2 great features in our server.
Perfect.
Are the Tradealerts bot and the usual whales.
So let's go ahead and pull up a chart that you like, and let's talk about some dark pool levels and how you use this actually as support and resistance.
Perfect.
Our clients,
all right,
that we give them an indicator that shows them support and resistance. And so pick a stock, because what I'll do is I'll look at our indicator on a day chart or 4 hours. I'd rather do it on a day chart just so we can match apples and apples. And then I'm going to look at our indicator, and then you can look at the dark pools on a stock that everybody knows, and then we'll go from there.
Absolutely. Okay, let's see. Maybe we can do, let me bring here my charts. On the stocks we were looking today on our trading session, I do think maybe we are going to do Google. Google seems good here.
Okay. So you pull up your chart for
Okay.
Google, you discuss the dark pool levels, I'll write those down, and then we'll switch over to my chart and we'll just look at the indicator that we give our autopilot members, that's the autopilot course, and then see where they lie, see where they actually look at and see if this is still something that they could utilize even with this information.
All right, okay. So our main tool here for using the dark pool levels would be the Tradealerts bot, and let me introduce it. So the Tradealerts bot, you can find it under the bot queries channel, under the Tradealerts algo flow. And when you type slash here dash, it opens you many commands. So there's different commands for the dark pool levels. For example, the first would be dark pool, and you put symbol Google. You put your ticker, the bot takes a couple seconds, and this is telling you the top institutional dark pool movements on today's price action. For example, we can see here Google, this block trade amount 259, what time it came, at what price. So we cannot know two things, but that doesn't matter because there is a shortcut to this. What we cannot know is who was buying or who was selling, number one, and number two, we cannot know if it is a buy or a sell. But what we can know is the amount and the price. And reading price action after and integrating these dark pool levels into the chart, we use them as support and resistance. So we can expect those levels to work as potential pivot zones for intraday trading, or even as price targets for day trades or swing trades as well. So then we go and we put command here, DP levels, our simple Google, and it is our second command. So the second command, the first one gives you the top 10 dark pool trades on today's data. And the second one tells you all those transactions, and they organize them by strike. So these are the levels, and we can see the activity. So let's see. We have here dark pool for Google. All right. On the lower, we didn't have much dark pool, but it does look like the dark pool activity, it's being located at 189.44. We start here with 831.88 million. And then we have the 1.96.39. That's 1.45 billion. So in between here, we have 1, 2, 3, we got like 5, 6 billion on what seems a block here, a range from 189 to 196, 6 billion position. We can see by the amount of the position, of course, this is institutional money activity. I hope so, but I don't think retail traders are trading 6 billion on Google stock. So of course, this is institutional money, and this is the range we're going to see.
And that's,
So
I'm going to interject
yes.
right there because I often say, right, like, so as retail traders are looking at a regular chart and they're looking at those candles, like there's no retail traders that actually participate in that candle. Like when you see the candle, it's primarily all institutions and large players. And now, just to reinforce, this knowledge is that here we're talking about 1.76 billion, $1.76 billion dollars, right? And yet, this is happening, but it's not affecting our stock market because it's behind the scenes, under the cover of darkness, I used to say. And so what's so cool is now that we're able to discover these types of trades, you can use it as support and resistance. So you can actually see the largest, longest block, the heaviest is at 1.76 billion. And that's at about what, the 194.66 thereabouts?
Yes.
Is that how you would use that as? Now, would you consider that support and resistance? And how could you tell when you look at your chart?
And now let's integrate it into our chart, and let's see where is price located compared to this one. So I paste here my dark pool data, and I will integrate first one. All right, the first one I have here, 1 second, I'm going to integrate 196.39, and this one is right here, 196.39. All right, the second one I'm integrating is the biggest, 194 194.66. This one would be located here, 194.66. So for that one, I would give it a bit more texture, so I remember that one is the biggest. And now I will integrate the lowest one, 189.44. And that one, I think it's here. I did this on the pre-market. I do it every pre-market. I run the dark pool data and I add it to the stocks I'm looking for today's session as a watch list. 189.44, we have it here. All right, so these are our three dark pool levels. Now let's zoom in here. So the dark pool levels don't mean price action is never going to break those levels, because if not, we would just bounce in between dark pool support and resistance for eternity. And the market will never break upwards or higher. So we treat them, when we want to integrate into the channel, we treat them as traditional support and resistance. When you hit that zone, you might expect a bit of a pivot. When you hit the most important dark pools, not all. We have seen how there were like 10 strikes, and we have included the 2-3 biggest. Those ones kind of work as pivot zones. If when we reach these big strikes, we break above or below, that would be a continuation signal. So we use them as support and resistance. For example, many times we see the dark pool is located right at support on a technical support, for example, a horizontal support or resistance level, or even an ascending or descending trend line, right? And if we start breaking above those levels, that would actually signal a potential continuation. Another technique, for example, is if we bounce from a dark pool support here, for example, we can see, discussing this example, this is the dark pool range. And where did Google stock actually bounce? We bounced right on the bottom of our range. Remember, let me bring it here. So Google was distributing a bit here. Then we went to the bottom on the support range at 189, and we had that bounce. And we can see this, how the dark pool worked perfectly. I personally didn't had any support level there. Maybe this candlestick, but just one validation. So in this case, from a technical perspective, I had no confirmation here, but the dark pool was telling me this is the support, and we actually bounced. And we can see that we are consolidating here in between the two biggest, this consolidation. So when we spot these dark pool levels appearing, and by what price action does afterwards, we can read what that institutional money is doing. So for example, let's say here this day, when we were on July 30, we noticed that this dark pool level of 189 was located at 200 million, maybe somewhere here. All right. Then on Friday, August 1st, we reached this dark pool. And then by Monday, we bounce on Friday, right? And by Monday, you request the dark pool level, and you realize all these increase. What would that tell us? That will tell us that is institutional money buying, because once we reach that dark pool level as support, we bounce with the institutional money activity increasing. So that is letting us know it was a buy. So we cannot know who did it, but that doesn't matter. It's so many people, so many important market agents trading here, that if it was a top hedge fund or the CEO or the board director, we don't need that information. What we want to know is where this activity and when, at what price. So when we are bouncing from that level, we can interpret that as a dark pool buy, because price action is heading higher after reaching that level. Now, for example, we are located here. If we break, just by viewing the dark pool, if we are able to break above 196.39, this one is too small, so I won't view this as resistance yet. This one is the real deal here. We break 196.39, that probably will look a run on Google. So I have that one here on my chart, and we're right here. Now, I wouldn't be buying Google stock just yet, because of course dark pool confirmation is an additional tool. We're not going to just blindly trade based on dark pool. What we want is to use dark pool as an additional confirmation tool for our own technical analysis, for our own charts. So we still have a resistance trend line here with also a previous horizontal here. So my final resistance would be located at 198.98. And guess what? I do think 198.13. All right, but still it's not that big to include it. So
No, I think that's great because
now that,
all of these you can see is kind of like a zone, not a fine line that
yes,
traders put on their charts, right? And sometimes as detailed traders, because a lot of traders are engineers, they just have these analytical minds. They want to make everything perfect. And I think what's important here to know is the stock market's not perfect and the zones are not. And so even though you can see that zone, please know that it's a fat zone and that there is some flexibility in that zone. So as automators,
correctly.
right? As automators, padding a zone, I always say is a good thing because it'll show you the momentum with that continuation, as in this case, the example that you're giving, that, hey, if we break above this level and yours was a little higher, that could be a good thing.
Correct, yes. And keeping in mind that example, let me show it here. For example, on Google, we initially broke below that level, but the candlestick didn't have a daily closing below that level. So we can see that even though many times they work up until, cents, we can expect them, to be like 189.44, and that is exactly level. There is a bit of a range, so we gotta view them a bit as ranges, and they do get updated every day. So for example, if you're following a stock, it would be recommended to maybe check it, maybe twice, 3 times per week and update your dark pool levels for it. I personally do it every day, but I'm a very active trader. You still wouldn't need to do every market, maybe when you're taking a trade or at certain important levels.
So
Now,
I just want to, tweak because this just ties in perfectly the way that you have your chart right now. It's so clean. And by the way, guys, the way that I met Paulo is I saw his charts and I just love the simplicity of it all. It's simplistic to be able to look at a chart and just see some clean trend lines. And if you were to take the dark pool levels off of his chart and just have the white line, which is at 198.98, and his two blue lines, you could see that these are just based off of price action, the candle itself, and not any dark pool levels. And so he already is creating the analysis. And what the dark pool levels do is give him additional evidence, so to speak, right? If we were investigators.
correct.
Additional evidence to support his thesis because he's going to put cash towards this trade. And he wants to make sure, hey, who else has money and where is the money located on this chart? So instead of just looking at each individual candle and making an analysis there, what he's done is he's lined up with a vertical trend line where the top is, and he's noticing a long-term bottom here. And so he can see then from the break of that last breakdown candle high that if we break above that 198.98, this then gives supporting, and we call it confluence in trading. In everyday life, it's like supporting evidence, right, to help you make a decision. And so if this breaks 198.98 or thereabouts, if you wanted to pad it to 200, that'd be no big deal because Google is a big stock and a couple dollars is no big deal. But if he wanted to automate this, he could still utilize the dark pool levels or just his vertical trend lines as support and resistance to be able to automate a trade. And Paulo does that every morning as well. He not only takes manual trading with our clients, but he also shows them how to automate a trade based on his thesis. And so I think that this is really fascinating to recognize. Now, I just want to show my chart really quick, and I'm just going to use the indicator that we give everyone to kind of now just identify on Google, how off are we just using an indicator. And as you can see, let me just move this really quick. The point of control on a daily, he was using a 4-hour chart, so it might be just an adjustable, but this week's point of control is at 191. And you'll notice that 191 is above his lower level, which was at 189. And then now the first resistance, which is right here, is at 195. And you'll notice that his important zone that he identified on his chart, I wrote this down, was at 194.66, guys. 194.66. Just to show you how even the information that's being provided and calculated by this indicator, how close it is to it, right? So at 195.11 is where this line is. His major dark pool level was at 194.66, and remember that it's a zone that actually went above that very thin line. And then you can see that for a weekly time frame, because this indicator is on a weekly, we're on a chart looking at weekly expected support and resistance. The resistance level is at 201. And on his dark pool that he wants to get into a long call was at 198.98. I joked about, hey, you could do this over 200. And here is a resistance level of that near that same area. So hoping that this gives you, right, confluence or evidence to help you get more confident with what you're using with support and resistance. And remember that trading is extremely subjective to the trader. And that's why there are thousands of indicators. Because our brains look at something differently, it can give us different ways to analyze something. So the way that I'm analyzing it and the way that Paulo analyzes it may be vastly different. But at the end of the day, with automation, we're actually looking at trigger levels. That's what's so important to us. And so when we talk about padding something because we want momentum, or where are you going to put your stop loss, where is support at, these are the same type of conversation that we're utilizing to do our automations. And I'm hoping that, his description of dark pools, which by the way, at this point, unless you have a subscription to Surfaces, you don't have, but just look at how advanced the existing platform is to already provide these levels. And so, Paulo, I guess on the scale of 1 to 10, would how detail oriented are you? Does it bother you that, the dark pool levels don't show you the actual block of the, highest level, that 1.76 billion? I mean, if we wanted to go try to measure it, we could, but how do you feel about that? Do you spend a lot of time, trying to identify, or do you just pad your entries? Or as a manual trader versus your automation, what do you do to kind of like prevent, I guess, a fake out?
What I try to do is focus a bit on the trend. So for that, there would be two important elements, which would be, of course, the chart. What is the chart looking? What are our indicators on the chart? And also maybe some net flow data from Tradingindicators as well, which we can find it on the same feature. So for example, in this case, what would be the dark pool trade I would be looking at here? We can see we have the green line for the buy and we have the red line for the sell. Okay, so the bull trade here would be, I wouldn't be buying just above dark pool. In this case, I would be padding it all the way up to our previous high, because this is still resistance. And even though the dark pool levels are here, we are still seeing a bit of what could be a distribution. So even though right now we are above this level, in reality we are ranging in between the biggest dark pool. So now I'm waiting here for either the bullish breakout or the bearish breakdown. So if we break above 198.98, that would be a great trade, which we could automate right now. Because if we break above that level, that would have the backing, the additional confirmation by the dark pool. So we are going to know that able to bounce from dark pool, break above the resistance block, and break above previous highs. So that has a lot of bullish continuation signals, and I would probably continue higher. So for example, here our trigger for Google calls on a potential automated trade, I would pad it honestly to 199. If we already break above, which is 2 cents here, but the dark pool is already padded up nicely against the dark pool, and it would be a higher high compared to previous price action. So that would be a long trade. Now, for today, for example, I set up an automated trade short for Google, which didn't actually trigger because it was on a potential break below 194.66. So if after these these are four rejections from this descending trend line, we continue in this range, I still don't see anything because, for example, here, if I wouldn't have the dark pool levels, this would look like a short, right? It would look like a short here. It would be a valid short. We are retesting resistance. But in reality, how can we know if we're just not building base for a breakout? That is where our dark pool levels come. So I wouldn't be shorting this candlestick right here because we could still kill premium, consolidate a bit here. We could see premium decay. But if we break below this dark pool, which is the biggest dark pool we have at 194, that would look like we are actually distributing, and then I would be looking again for 198. So the trade would be breaking below the biggest dark pool to reaching the low of the pattern, and that could bring us this downside. So for example, I said my automated trade for Google, my strike price was somewhere around 190, 192 here. If we broke below this level, I would be looking at the reaches of support, and my trigger was below that level. In this case, it didn't got triggered, but it did save me a loss because we are still back to resistance, and the breakdown has not yet happened, and we can see how the dark pool, the biggest dark pool, provided that big bounce.
Yeah. So I think this is great because as you're looking at the chart, a lot of people out there, Paulo, and I'm sure a lot of people are like, hey, just give me the stock, that's going to be making money going in one direction. And what's so interesting is that really if you can just change the way that you actually think about trading and say, you know what, I want to be prepared for both. Because I don't know what the market's going to do. I don't know what Trump is going to tweet out next. And whatever he tweets out, or any macroeconomic situation that we have going on, or a war, conflicts, any current event could blow up any charting analysis. And I always say that, like many people do so much homework, right? And with this presidency, typically speaking, for those of you that don't know, most presidencies don't want to be in the limelight. They just want the economy to kind of just run smoothly without a lot of lows, highs and lows. But everybody has a different personality and they get the way they want. This one, but you should be cognizant, right, of how our government's running to identify these market conditions, because this affects traders. And so Trump is creating a very volatile market. Now, this is great by the way, for option traders, because we want sharp moves. Volatility equals sharp moves. Because if you take a call or a put, you're in a sports car if you're taking a call or a put. So you want price action to be volatile and go fast. The great thing about automation is that you can do your analysis just like Paulo did and not have to be married just to one side of this equation, because we don't know what the next tweet is. We don't know what's going to happen overnight. So if you have your automation set as an example like we do for the week, then you can set it and forget it, knowing that you have a trade, whether the market goes bullish or whether the market goes bearish. And I know that this is one of the concepts that's so hard for people to know, or to trust, or to commit to, because you have to commit to doing the opposite side of the trade, which might take you 2 to 3 minutes for automation, right? And you might be in a hurry and you don't want to do it. But when you don't do it, you miss out on a really big opportunity to take advantage of the opposite side of the trade, because you may get that wrong. And sometimes the volatility is so strong that you can actually have a trade work in both directions for you. And that's what's really cool, I guess, about automation. Now, Paulo, when I first met, you weren't doing a lot of automation, but you are now. Do you feel?
A lot, yes.
Yeah,
A lot now.
what do you think about that? Because this is great from an trader who loves chart analysis and doing their own. How do you feel about the automation when you put these trades on?
I like it a lot. I actually love it. What I have found is that even as a technical analyst, you might hesitate with some position. And by the time you're opening the chart and viewing everything, the trade might actually go, especially in this market, which is of tweets and news as you mentioned, and
Yeah.
all of the sudden trade it off on these automated trades let us be able to profit from setup. So now that I have actually started also trading automated, I found that many of these trades they actually trigger before I can even do it manually. So for example, last week I was looking, let me share here the chart.
Sure. This is a great
um,
point. And this is the
this
point
is
of where machines can actually get us in and out much quicker than just a human being. If I walk to the coffee, this used to always happen to me as a manual day trader, and just walking to the coffee machine could be life or death for
yes,
my trade, right?
yes, correct.
So being
And
able to automate
sometimes you
is a
actually
great skill.
hesitate as well.
Yeah.
And yes, sometimes you actually maybe hesitate. I'm a bit of overthinker with many stuff, so I do a lot of mental rounds to the charts. Should I take it? Should I not? And I can even stare maybe sometimes 30 minutes at the chart and should I short it? Should I buy it? And in between that, trades come and go and they happen.
That's
So for example, I wanted to share this one was an automated trade we took on Monday. Was it Monday? Yes, it was Monday. So on Friday, we noticed Apple stock here with reversal. We broke below our wedge structure. We had the first rejection, neckline, second rejection, right? We had a retest of resistance and confirmation on the pattern. So on Monday on our live trading session, we noticed that it was a double top and we mentioned, all right, we were opening somewhere around here in the pre-market. We can see 8 a.m. we were around 204. So we mentioned there's two potential short setups here for Apple as it already got invalidated, but by that time it was a double top and we were looking at either a breakdown of 202.63 dark pool. We were opening at 204 here. So
okay.
if we break lower here, that would be a short setup. Or if we actually retested here the neckline breakdown for the double top at 207.70, that was our automated trade. We automated this one. We can see how the Apple actually went, retested resistance, and had a big reversal. By the time I missed that reversal, price had already went from 203 to 207 back to 203, and the trade was given a very nice profit. So I do think these automated trades does let us set trades and remove emotion from it, because sometimes there's also the emotional part. We want to chase the trade. Sometimes we missed it. And when we set the automated trades, when we set them on the pre-market and on the weekend, if we want to do it from a swing trade perspective, when we're setting those trades, we are still cold because the trade is not yet open. We don't have emotions attached to that trade.
Right.
So our analysis can remain objective, it can remain cold, and we're going to set the trade if we break here, if we break there. So we set those trades, we set them and forget them. We don't have to follow them. We can even log out from the broker. And we are not going to get influenced by the news, by the tweets, but what we find on the internet. So I think if maybe we start manipulating too much, like I said the order, then I delete it, and we can kind of get full of noise, and
Yeah.
it's a way of being more clean, more organized. Does let us set those trades and let them without ourselves trying to figure out how to do them, and in the end just underperforming what we could have done compared to an automated trade.
Yeah, I used to, when I heard the term analysis paralysis, I just felt like that was a
Yes.
great definition of me a lot of the time. And I used to, tell clients that, hey, especially when you're coaching people, that, a professional athlete, as an example, he's a professional. He does this, he trains every single day. He performs, outstanding. But the problem is that, each and every day when you get up to go trade, you may be professional, you may be experienced. The problem is that we can't perform at our highest level every single day. Not even athletes do that. Sometimes they wake up, they're sore. They have to go get a massage. They got to go take an ice bath. They have to rest their muscles to get prepared for the next race or the next challenge, the next milestone. And even as a professional, no, regardless of what profession that you're in, you're going to wake up and some days you're just not going to be on mark. You're a little cloudy, you're a little slow, you're spilling your coffee. Those are the days that it's awesome to be able to have your automations, as an example, either already set, or you could do some quick analysis, just set it and forget it and move on. Because that analysis paralysis, I can't begin to tell you how hundreds, thousands of clients that have this same issue. And us detailed personality people that like details and we like to analyze, we can analyze what we just analyzed 2 minutes ago and change the whole look of it. And that's the problem. And so I really think that you're bringing across, as a manual as well as an automator, you're bringing across a lot of great points that you utilize. And I really, really appreciate you.